Hello and welcome to Sectors Up Close. I'm David Pollard. Today we're talking the dollar and my guest is currency market expert Jane Foley, Head of Forex Strategy at Rabobank, London. Greenback or switchback? Traders love to speak of roller coaster rides, but since October of last year, it has not been hyperbole to talk of some scary ups and downs in the US dollar. Though mostly downs, with the dollar index sliding from over 114 to somewhere around 101. To blame, say the traders, is the data. June numbers show annualised CPI running at 3% compared to over 9% in June of 2022. That and other weak surveys out of the US and talk of recession, reinforcing bets that the Federal Reserve is nearly done with its tightening cycle, even as other central banks are still raising rates. And there could be more thrills and spills ahead, with upcoming policy meetings from the ECB, the BOJ, and the Fed itself all due before the month of July is out. Well, with me to share her insight into how dollar moves might play out is Jane Foley, Rabobank London's Head of Forex Strategy. Welcome, Jane. Let's look at the dollar index big picture first. The dollar index has fallen dramatically since the highs of late last year. Is that all down to the Fed being further ahead in its tightening cycle than other central banks?
Well, certainly the Fed is a large contributor to that. So, for instance, the market is fairly convinced that the Fed is very close to reaching the peak of its tightening cycle. And, of course, the CPI data for June just reinvigorates really that expectation. But there's a little more to it than that. If we look at the first half of this year, what we had in the US is a much more resilient economy. It helped boost risk appetite more generally. So if we look at stock markets around the world, they looked better. So perhaps the dollar wasn't getting the sort of support that it might have got from the safe haven bid. That tends to be hotter when, for instance, there is fears of a recession.
If there is a recession in the US, do you see those safe haven bids keeping the dollar buoyant?
If we stand back and look at the more medium term, the longer term projections, we know that the dollar is likely to find some support if the outlook for global growth is sour, because the dollar tends to weaken when risk appetite is very buoyant and people are moving their assets into risky assets, into emerging market stocks. Now, some emerging market currencies have performed very well this year, but they tend to be currencies, say, the Brazilian real. Central banks who were more proactive at keeping inflation down. Now, those central banks could be cutting interest rates well before the Fed. So the bullish signal for those currencies has passed. And then if we get a coincident potential recession in the US, slow growth in China, slow growth in the Eurozone, that's not really an environment where people are going to be rushing into emerging markets en masse. And that suggests that the dollar may not be at the start at all of a bear cycle. So softness near term, perhaps not so much over the medium term.
Well, let's look at the Eurozone. The ECB has hiked by its fastest pace ever, and there could be one or two more hikes on the cards. Can we expect the dollar's decline versus the euro to go on?
If we look at September, the market is perhaps thinking, well, the risks of the ECB hiking in September are perhaps bigger than those from the Fed. Now, that gives the euro some support. But once we get to September, the market may stand back and think, the ECB is not going to be hiking anymore. It's all in the curve. What have we got in terms of the outlook for growth? Well, we've got a German economy which was in recession or is in recession. We've got a German economy whose economy is very concentrated on manufacturing, that is very focused on China. China is Germany's biggest trading partner. China is slow. That comes back through slow export growth in Germany, weak manufacturing orders. Maybe the market come September will decide, you know what, we're long euro and the outlook isn't looking that good for the Eurozone economy. So I think whilst the euro-dollar exchange rate may be well supported in this time frame, perhaps up to around about September, I think the euro-dollar may find it difficult to push much higher beyond then.
Now, the outlier amongst the big currency pairs has been dollar-yen. Yen depreciation driving the dollar up pretty strongly since early January. Is that about to turn? We have a Bank of Japan meeting at the end of the month. Could that be a pivot point?
I think perhaps it already has turned. And I think the market is looking ahead to this Bank of Japan policy meeting. Now, if you go back a couple of months, there was a lot of expectation that this meeting in July could bring that tweak in yield curve control, which the market has been waiting for, really, at least since the end of last year. The market's less convinced now that we will see that tweak, but there are still some die-hard forecasts out there anticipating that July could be instrumental. After all, the Bank of Japan will have to revise higher its inflation forecast. So that's why the market's not taking too many chances going into this meeting.
And in one sentence, how should investors play this quite difficult market? Where do they seek value?
I think investors need to be on their toes. I think, as I say, we can see one trend now in the 1 to 3 month and then another trend beyond then. But generally speaking, I don't think that we're going to see any breakout trades. I think a lot of the trading levels that we're going to be seeing are going to remain quite familiar, at least for the time being.
Okay, Jane Foley, Head of Forex Strategy at Rabobank London. Many thanks for your insights today. And that is your roundup of the latest moves in the dollar and the currency markets. I'm David Pollard, and this is Reuters.